Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the week of October, last of October. As you can see, now we are coming closer to an end of my backtesting session, meaning backtesting era. As I told you in my previous videos, like aerial videos, that we are going through phase. First phase was buying a course, learning from it, and the second phase is writing my plan, making my plan according to the course, according to my understanding, and third phase is the backtesting phase, right? And after the backtesting phase, once I have gained confidence, like the backtesting and the front testing are two different things, and yeah, you have to do both. Right now I'm focusing more on backtesting. After that I will focus more on front testing. So backtesting has literally helped me learn a lot about this pair, GBP USD. I've learned a lot about this pair, how it works, how it moves, and all I gotta do is focus on myself, not to get distracted from with other people's profits or other people's success or all, right? Take inspiration from them, but do your own due diligence. Meaning, today I took a loss here. I genuinely took a loss here today. I will show you on Euro USD. On Euro USD today was a loss, and obviously I took that loss like a man, like how we should be. This was a loss right here on GBP USD. Sorry, it was not Euro USD, it was GBP USD. I just came from the gym, and after coming from the gym I tried to force a trade right here, and whenever I have tried to force a trade I have lost it. So yeah, I have to give myself feedback and also learn from it. So now going on to the weekly breakdown video. As you guys can see, this video is going to be a small video because like nothing happened on this week. It was a very weird week. So now starting from the weekly, the previous weekly candle is a bearish candle, so next week I will be looking for sells, meaning my weekly bias on GBP USD is bearish, whereas on DXY will be the contrary, which is bullish, right? So this is my target, this is my draw of liquidity, and on GU this here is my draw of liquidity and to fill up this fair value gap. So after knowing that, I go to the daily time frame, and the same sort of thing, the supply demand concept. Supply demand, the Friday candle closed as a bearish candle, so going on Monday I will look for sells because it is aligning. Whenever Monday and whenever the weekly and the daily bias are aligning on Monday, I trade Mondays. Like in this case, Friday was a bullish candle, so it made sense for buy on DXY and sell on GBP USD. And if I show you the news, on Monday there was no news, and after that the whole week was a very huge New York session dominated news week, as you can see right here, right? So now going on Monday, obviously I go to the lower time frames, I do my top down analysis. This is called top down analysis, going from the daily to the 4 hourly to look for some sort of supply zones, fair value gaps, market structure shifts, SMTs, so on and so forth. So here in this example I can see there is a H4 fair value gap clearly, as we can see, which the price can easily go and fill, right? So now going on the H1, obviously if I'm looking for sells I will look for some sort of supply zones, which in this case where there was a supply zone here, I believe, which I did mark also, I believe. Yes, I did mark this supply zone right here, and looks like my alarm got hit. And on Monday I was looking for sales from this sort of supply zone on the M15, because on the H1 this was not one of the cleanest zone, and as you can see even on the H1 this was a supply zone, but I marked it on the M15, so I have also written it as a M15. Let's see why I have marked this as a supply zone. So going on the M15, if I show you my sessions indicator, this supply zone was valid because it was in the New York session. So whenever a supply zone or demand zone is in our session, meaning London or New York session, that is when we tend to take the trade from that zones. So in this example there was a supply zone in New York session, and yeah, and also the move was happening on New York. So previously I entered a trade here, took a loss, entered a trade here, took a loss, entered a trade here, took a loss, meaning whole day the market was manipulated. And this is the reason why I tell you guys to watch the price action on the H1. And if you are trading supply and demand zone, supply and demand, not the MAC model. If you are trading the MAC model, then you have to watch the lower time frames, right? If you what you want to see is what you are seeing. And the MAC model you can also take against the trend. I have also noticed that the MAC model you can take also against the trend, meaning the lower highs or the lower lows, or higher lows or higher highs, right? So but if you are trading a pure supply zone concept, the Sal Sanchez concept, so in this case I was trading the supply zone concept that I learned from Sal Sanchez. These are the only two strategies that I use and which I will use in the future. So this was a losing trade. I entered the trade somewhere around here. It was in my time window. It was in a supply zone, and Asian range sweep, Asian high liquidity sweep, London session manipulation right here, and everything I want to see in a trade was here. So I would have taken this loss any day, but I didn't journal this trade because I thought that throughout the week I will get better trades than this, which didn't happen. Let me show you why. So Monday was a back testable journalable trade right here, but I didn't. So now going on Tuesday, my bias is literally not clear. My weekly bias is bearish. So whenever the bias is not clear on Monday, I tend to go with the weekly bias, right? So Monday was a doji, and even on DXY, the Monday was a doji candle. So whenever the daily time frame gives us a doji, that is when I decide not to trade. And if I was looking for something, I would look for sales and I would take a loss again, because whenever the daily bias is not clear, I trade with the weekly bias, and my weekly bias is bearish, right? So going on Tuesday also, there was New York news, as you can see. So Tuesday we didn't do the trade. So now going on Wednesday, there is German prelim CPI and ADP non-farm employment change. So just waiting for Tuesday to close, I got my bias for Wednesday, right? So now on Wednesday, going on Wednesday, if it's not a MAC model, then I will look for buys, simple as that. But on also on USD, it is bearish candle, so not a problem. The dollar is literally looking like it's going down, and GBP USD is looking like it's going up. That is when I go to the lower time frames again, do my top down analysis, and here we can see the market structure has shifted right around here, change of character right around here to the upside, right? And after the market structure has shifted, I wait for the Asian range to close, because our strategy is based on the Asian range, and I waited for the Asian range to close. The move did happen, but it happened, it was a MAC model, I believe. So Wednesday was a MAC model, but I didn't took the trade. Why? Because the MAC model I cannot backtest because data point is unavailable, right? So that was one of the reasons. And also I tried to mark a demand zone here. I tried to anticipate this to be a demand zone, which was not respected. If I had traded this New York demand zone, I would take a loss. So Wednesday was a win, to be honest. It was a MAC model, but I didn't took the trade because I can't access the 5-minute time frame on the back testing. So that was the reason on Wednesday I didn't do the trade. But the buy did happen. The Asian low sweep, Asian low liquidity sweep, target the Asian high, it did happen, right? Our concept did work out. The concept that we used, the SMC did work out. And yeah, going on to the next week now, sorry, going on to the next day, let's see what I will be looking for. So now things start to get interesting, right? Monday, Tuesday and Wednesday were literally GBP USD and DXY were doing same sort of things. But now going on Thursday, right? Going on Thursday, my bias is bearish on GBP USD. Clearly bearish because of how this candle closed, looking so bearish. But even on DXY, the candle was bearish. So this is when you don't want to be trading in the markets. Trust me, this is the condition where you wanna don't be where you don't want to be in the markets. You don't want to trade the GBP USD. Rather, you can go and trade EU, or you can focus on other things, right? In this situation, it's better to not trade rather than trade, because you are not putting the probabilities in your favor. Even on EU, if I go, the market was bullish. So if I would look for anything on Thursday, it would be buys, right? And if I did that, I would take a loss again. So whenever GBP USD and DXY are doing same sort of things, that is when you trade EU. I think there was something wrong with EU or GBP USD right here, because look, EU is literally following, right? EU is following DXY, it's going up, bullish, no problem, right? But on GBP USD, it is not following. It's doing the same sort of thing like DXY, as you can see right here. DXY is going downside, and also GBP USD is going downside. That's very, very rare, and we don't see that happen usually. But in this case, we are seeing that, so we have to consider it. Also, on the daily time frame, there was a fair value gap which got filled to the T. So after this Thursday candle closed, now it's looking like it's rejecting from the daily demand zone, and on DXY, it is clearly looking like it's a bearish candle again. So also on Friday the bias was not clear again like it was on Thursday. So trading didn't make sense to me. If I would look for something, it would be on EU, and in this case, we can clearly see the average hourly earnings right around here. Friday, it was an NFP day, as you can see right there. And on Friday, I would look for nothing. So even on Friday, I didn't do the trade. So now, finally, it is a bearish candle. On Euro USD also it's a bearish candle, and on DXY it's a bullish candle. Finally the biases are now aligning. So this was a very tricky week, and let me quickly show you the callouts because I've written them, and those are very important, right? So Monday was literally a losing day. No supply zone got respected. Even the main New York supply zone didn't go respected, as we can see, so we didn't took the trade, right? Simple as that. Going on Tuesday, the bias was not clear, so didn't even took the trade because it was doji. So waiting for Tuesday was the best option for us. Wednesday closed a clear bearish candle, whereas DXY was also bearish and EU was bullish. So logically it made sense to buy, but obviously whenever GU and DXY are doing same sort of things, I will not trade. I have learned from this backtesting. Every session that I do on the backtesting, I am literally learning things, right? I am learning things. I am learning about the time zone. These time zones, I have learned about them. I have learned about so many things, and if I continue in this trajectory, I'm gonna soon become a profitable trader. I believe in my grind and God, obviously. So at this moment, very weird circumstances are happening. GU is not aligning with DXY. They are doing same sort of things and conditions like this where you should not trade GU and instead look for trades on EU, or just not trade. Simple as that. Capital reservation, focusing on some other aspects of the business. Very weird week, as we can see. On GU we could not take any trades because the market just didn't provide us with any. So if the market is not providing you with any opportunities, that is when you don't trade. So simple as that. This was a very tricky week for me to trade, and also to journal, also to backtest. Didn't got any trades. There are going to be weeks like that where you will not get any trades, and that's totally fine. Now, just because you didn't got a trade on this week doesn't mean that the next week also will be bad, right? So we can clearly look for trades on the next weeks. And also the market was at its prime in May, June, July, August, September, right? The market was at its prime at that time. From October, the price action has been a little bit bad, and our setups are not showing itself as regularly as it did on August and September. So from October, the price action is a bit slower, but we also know on November there is election. So let's see what happens. Catch you on the next video.